it's Mr. Bilbo Baggins. In this video, I discuss with a student of mine the fundamentals that I use to catch bangers using smart money concepts, like building supply and demand with liquidity. A mouthful, I know, but it will help you. This video goes into great detail of not only how I identify key aspects in the market, but how you can use them to your advantage while I'm not here. So let's get it.
All right, so as far as fundamentals go, the higher time frame obviously holds a lot more weight than the lower time frame. But the important thing to always remember is the lower time frame builds the higher time frame, aka the market's fractal. So anything that you see on one time frame, let it be like the 100 million gajillion second time frame or the hundred, the 100 month time frame, it's all going to be the same as long as you have like enough data. So like obviously the problem with like 100 month time frame is it's I'm not even sure like how that would be really composed into the market because that's just so much time that's going by before you take your next trade. But the idea is like if there was enough time in between these candle to form, like more or less the same thing would be happening on the millisecond time frame as it would be happening on the daily to build ultimately like price action out for months, years, all that stuff on it. Now, when we're considering supply and demand, which is just like at the end of the day, supply is just sellers in the market, right? And demand is just buyers in the market. We really want to take like 15-minute POIs and above into consideration the most. But at the end of the day, any demand or supply zone will get a reaction regardless of the strength it has. So like if it's a 1 minute, candle or 1 minute, demand, it's still going to get a reaction, whether it goes and breaks the high or, whatever it may be. It'll get like some kind of tap. You'll see it, react a bit from there, go up a bit, and then maybe it breaks it after that. But it's always going to get a reaction. The most common thing is like you're going to see like demand, like let's say it's like sellers were in control. Then at that point, like, you'll see selling, but in order to like pull back up to supply zones, you would see it tap into demand. So you might think like, oh, it tapped this demand is going up, it's going to break this high. But ultimately, order flow is probably still bearish, and like you have to get pullbacks regardless because at the end of the day, we know the market doesn't just move like that. Sometimes it does on crazy days, but more or less the market moves like this, up, down, up,
Mhm.
down, up, down. Reason being is because price has to more or less rebalance, retrace, all that good stuff. Otherwise, you'll create huge imbalances in price action. And honestly, like as far as like a fundamental thing, it just causes a lot of like bad things down the road. Like honestly, how they pumped the market during COVID is a good example of that. Like it was just honestly very unhealthy price action as far as buying goes. And like now, like ultimately we're paying the price because now the market's rebalancing itself because it moves in a cycle.
Mhm.
Now, as far as liquidity goes, right? To me, it's really just like old highs and old lows. So at the moment we make this high, as soon as we start printing downward from there, you know what I'm saying? This level right here has become liquidity in my eyes. Same thing here. As soon as we make this low, the price starts pulling up, and that area becomes liquidity in my eyes. And you'll basically you want to base your confluence of liquidity off of mostly order flow, but also how it interacts with these areas. So like the reason I say that, the price comes up from here and basically takes out this high, but doesn't form any price action higher than this and respect this, then I know that that was just super liquidity and we're ultimately, still bearish. Versus like this is still liquidity, but if we have this happen, come start buying, and then we break through and push back down and we respect this demand, like ultimately this was still a point of liquidity because the market was gravitating towards that. It grabbed it.
Mhm.
Once it grabbed it, it ended up, continuing to form better price action above, full body breaks or things that people will call change of characters or break of structures. And then it pulls back into this demand level here, and goes higher. But more or less, that's all price is old highs and old lows. And the more notable areas of liquidity are going to be areas like like these where you have like wicks, long wicks like this, just because like obviously in terms of volume, we want to see full bodies holding price action up. Now, knowing that this is liquidity, below these lows, below these lows, like if price was to react here and start going down, we know ultimately like what the target should be. And like the beauty of knowing liquidity is just old lows and that the market is ultimately like always targeting liquidity. Like let's say you get into here on the trade, right? You can exit at this low and like that's a valid target. As soon as you stop, as soon as you start respecting this high and like now this low hasn't taken out this high, now this has become a weak low. And like all that liquidity that got printed here is gonna like ultimately come down here as best it can. Maybe it grabs only a bit of it and goes back up. I think it's true. And there it goes. So maybe it only grabs like this portion of liquidity here.
Mhm.
Like in that sense, like that would be fine too. Because in this instance, sometimes like this would be just enough liquidity for it to, go back and do this. Because at the end of the day, liquidity is just like fuel in the market. Once the, price grabs liquidity and it gets enough of like what it wants, basically, it'll usually try to reverse the other way. So in terms of market structure, highs and lows, you really only need to consider, the most immediate price range. And then you just want to patiently wait for a price to see how it reacts in the respective discount or premium. Buyers are going to be your discount and sellers are always going to be your premium. And you never want to really buy or sell like in this middle area here, this equilibrium area, just because really like anyone could be in control. Like you'll see here, we bought from here in the equilibrium area, came back above, and then pulled back to the equilibrium, and then went back above again. So it's just kind of like tricky to play those areas. Like ideally, you want to play like I said, your premium or discount. So at this point in time, considering what's called considering all these concepts, order flow is still the most important thing. So if buyers are in control, then buy. If sellers are in control, then just sell. You want to buy low and sell high, which is where that ideal premium discount comes in. And then really there's no need to overcomplicate the game. At the end of the day, really all you can control in the market is your edge. Other than that,
Mhm.
you're just putting on trades. And in terms of probability, you have control over like a series of trades, knowing like what your edge is, how often it hits. So like over a series of 50 trades, you may know that you're gonna hit at least 60%. And that's all you know. So you just put on your trade every time you see that edge. You know what I mean? Like,
Mhm.
all right, so now I want to show you on the chart all those concepts, how we kind of link them up. So already you see how I drawn out the premium discount. And in terms of order flow, or in terms of like the steps I'll be doing, my first thing would be to check order flow. So obviously, like it's not really that hard to tell that sellers are definitely in control. You know what I mean? It's clear to see there. But you want to check what's immediate, like I said. So this is the most immediate price range. Previously, we had broken this low here. And so in that sense, order flow is in control of by the sellers because this is like the last valid demand that held in terms of this, previous high that was created. Now, if we weren't already on the 15-minute, I want to go to like the 15-minute or higher, depending on your trade style. I only trade the 1 minute to like 3 minute for entry. So the 15-minute is enough. And plus the 15-minute links up with the 1 hour, which links up with the 4, which links up with the daily. So it's a very valid POI, it's very valid for finding POIs essentially. So just off of the bat, we talked about a few different POIs. We talked about IFCs. So in this instance, this would be your IFC here. Or really, this would be an IFC as well, but it could be either one of those zones that we're at. So we'll just do both. IFCs being your institutionally funded candle. And in case you forgot how we basically identify those, essentially, you're waiting for like a break of structure, or like I don't like to say break of structure. I like to say like a break of demand, because like that's more easy to identify. Like, oh, we had demand here for sure. It broke. So, and you look for a small candle. Usually it'll be like a consolidation candle like this, and then you want to get some kind of imbalance that was created afterwards. So same here. We have this IFC here because it was like the last candle that got engulfed, basically, meaning it was much larger. Like this red candle was much smaller than this black one. So, and then price broke below this demand, and then broke below here. So this could be an IFC, like I said. And then also, if you want to take that aspect away, right? Just move it right here. We could also say that we have, an imbalance here in between these wicks. And for me personally, like if I was going to identify as an imbalance, I would take it from like the top of this wick, the low of this wick, and like that's the most narrow your zone could be. But to be safe, ultimately, I would just take it above like this, above this wick and above this, supply zone as well, just to stay safe. No need to be a hero, especially if you're looking for an entry in the lower time frame, anyways. Let's see. There's an imbalance.
FEG, that one.
Oh, yeah, there it goes. Everybody got. Cool. So we have a fair value gap here. Took out demand, or I like to say imbalances, but I know ICT uses fair value gaps, and I did definitely learn a bit more about imbalances from him. So I'm just gonna go and shout that out. But ultimately, that could be used. And then if we want to talk about our range, supply and demand, basically like this was the last low that was created, the last high. Once this low breaks, this demand zone breaks, this entire area more or less will form your supply range. All right. So basically, if you want to minimize your entries, you could take one from like 0.75 here, or 0.75 of that one. That one's pretty spot on. Or you can enter at the 0.75 of this entire, supply range. Now, obviously, that's only if you're wanting to enter off of the 15-minute time frame. So, meaning like right now we could enter here, and understanding that this is the extreme level of like this entire leg, and like this like basically low right here will be the likely target. You draw your trade up on the 15-minute just like that, and like that would be a valid trade. Actually, I'm going to remove that. All right. Now, the third thing to do, so our first step was to check order flow. Okay, order flow is bearish. We just took out, this low, this low, this low, right? Second thing to do would be to find a POI on the higher time frame, 15-minute or higher. So that's what we just did now. The third step will be to move to the lower time frame and identify any relevant points of liquidity or zones that line up with the overall narrative, meaning the overall order flow that we're seeing happen on this time frame. So what I say by that, like basically, usually you're gonna get some kind of action like this, maybe if it's the 1 minute, not always, but all you're looking for is for a reversing order flow. So on the lower time frame, basically these candles are bullish candles. So on the lower time frame, order flow is probably bullish at this time. Now we're coming to this 15-minute POI on the higher time frame, and we're realigning with the higher time frame, meaning now even though order flow is bullish, we're pulling back. The idea is that we could keep buying, but we ultimately are expecting, some kind of sales. So what I might do, right, is since I'm already on the 15-minute, I'll mark out like this 15-minute low, and I understanding that if I get a full body closure below that low, after coming into this level, and this is like how I correlate the time frames. knowing basically if I get a 15-minute closure below this candle, right, this one right here,
Mhm.
that shows bearish intent. And we failed to break this high, which means that, meaning we came high here, failed to break this high. The idea is that we should pull back, break this low, break this low, break this low. But the important thing to understand is that if it starts pulling back and doesn't break this low, then ultimately the order flow, will remain bullish. But my expectation in terms of order flow right now that we're coming to this key level is that we're going to go bearish. Now, reason I say that is my expectation is that ultimately price could keep buying like this. So if I don't see price come make a high, create some kind of demand here and then take out that demand, then I really shouldn't take any sells. And like from this point, I can either take sells from like right here. Uh, uh, I can take sells from like more or less whatever zones here. Gee. Bro. Or I can wait for some more intent to show, in the market. We get like another tap, another break, and like somewhere either here or
Mhm.
here off of order flow. But ultimately, like, we're not doing anything crazy. We're just literally following trend. Okay, we come back into here. Okay, boom. Now we get an entry. The hardest thing for you to do will be to find like your POIs. But like at the end of the day, you shouldn't really be trying to find like a whole bunch of different ones. Just get good at finding like one. So if your thing, honestly, my recommendation would be to just use like range supply and demand at first, just because it's so easy to identify. And like within those range supply and demands, like let's say we have our range demand here, or range supply rather. Like you're gonna have several like smaller candles in here. So inside of here, you can study the price action. And if you're able to identify the fact that, okay, this was probably my IFC here, and I can wait for it to come into my, supply and demand range. And I can enter like more or less off of that inside of my range. So it all depends on how you look at it. But the easiest thing, like I said, would be just to identify the ranges at first.
Okay.
So we'll go ahead and go down to the lower time frame, see what's happening down there. All right. So already,
I like how you told me 3, and then you're like, let's go to 1.
yeah, that's my thing. I'll show you the 3 minute too. Honestly, like you can use them all, but like I would use only a couple for entries. All right. So right now, basically, I don't think I would take any entry yet. And as you can see, like I said, this was that 15-minute low, the 15-minute
Mhm.
candle low. And so now that I'm on the 1 minute, I can see even more of a confluence behind the idea that if this level was to break, an order flow would definitely, be going bearish, because this is a valid demand zone. We had an IFC created, engulfing candle, and we broke above, this previous high over here. So we're definitely, it's valid.
Mhm.
Take anything over here. Oh yeah, we even took out this point of liquidity as we tapped into the IFC here. Oh, did we even tap it? Nope, not yet quite. It's close though. All right. So for me, I wanted to take out more or less like this low right here. And the problem with the way I enter off the 1 minute, like it's kind of aggressive. So like maybe it takes out this low right here, but then it comes and sweeps this, and then it comes out and takes out that low, and then starts forming like the actual intention. But like me, I have this thing where I say like I will attack any particular trade idea like about twice. If I take 2 losses in a row, let's say I try to enter here and it knocks me out. Then I try to enter here again, it looks good, then it knocks me out. If it knocks me out that time, even if it comes up here and it looks like this is the greatest move and it just goes to the floor after that, like I'm gonna go ahead and stop trading, because at that point, like that's where the revenge trading comes in.
Mhm.
And you want to protect your capital, because ultimately there's just going to be days where you just get tricked, like your edge is not perfect, but it should play out enough times to where you feel safe enough to use it, right?
Right.
So price action does look a little funky in here, honestly. possibly sell from this level. But like I said, I don't see a lot of intention as of right now, just like little bit of consolidation in here. I want to see more or less like some full body closures like below this level.
Hmm.
I'm gonna move this a little bit.
What if the body just partially closes below that?
Um, okay, so this, and don't quote me on this, but this is my theory on it. If we're coming into a higher time frame POI and you just get a
Hmm.
small closure below there, to me it's still valid because like if you were to be buying right here, right? Like on if you
Hmm.
put a trade order in on MT4 and price came below even by a wick or two and broke that, then like ultimately that demand level broke. And like order flow was pro trend on the higher time frame too. But on the flip side, like right here we're buying, right?
Hmm.
But ultimately we're only buying into look at all this choppy action, not very good action buying up. But we're buying into a supply level. If I see just like little wicks close above here, like I'm identifying that as a sweep because ultimately like this level, these like this buying level, this buying action is not really like strong price action in general because it's just pullback on the
Hmm.
higher time frame. So if I'm not seeing full body closures anymore, like that's a red flag to me. Like if this is like a good a good sign. And where you get into this area, look how like skittish price action is getting right here. Then this
Yeah.
demand forms like a weak demand. It pushes up. It already like it's like starting to fold in here a little bit. It might break up, but I don't know. But like I'm saying, like this formed a high, then this formed another high, then it broke below this candle low. Right now it's sitting in this imbalance, so it can retrace back up again, take some liquidity above this high right here. But ultimately, like I would be anticipating some kind of sales. And the thing is, like it can play around as much as it wants. Oh, wrong one. But if price doesn't, break that high, then it's gonna crash. And as soon as it starts taking out lows, like you can just start following order flow.
Hmm. Okay.
So, ooh, yeah, like I said, snatch liquidity, one candle, and then pull right back down into this demand again. So, like at this point, like you want if demand is the same control, you want to see it, do one of these, break above, go out. But at the end of the day, I'm looking for this to break in terms of sales. Boom, breaks out. And like you see how it broke out, right? With this one candle.
Hmm.
But then when it starts pulling back, like when it broke out, you didn't see any like more closure above this supply level. And so like right
Okay.
here, all it did was snatch liquidity out for this high
Hmm.
and retrace up to, grab even more liquidity, tap into something up here. So like that's why ultimately like in terms of supply and demand, market structure, all that stuff, like I pay attention more to liquidity than anything else. Because like I said, if I was just basically hoping that buyers are just gonna do their thing after here without focusing what happened on after it broke out, I'd be a sad camper. Because like this was like good price action, but when it came back into this imbalance right here, it should have went back higher.
Yeah.
Because this imbalance is what took out this high right here in terms of order flow. So in terms of order flow, this area should be respected. It even comes and mitigates the old high again. So this area should be respected. Now, once you see it come up and not break above this high right here, like that's your first sign of bearish intent. So for me, like I said, I take aggressive entries. So any demand I see get taken after it comes into this supply, this POI, and that's why it's called a POI, a point of interest. Because at the end of the day, you shouldn't really be taking entries straight off of these zones. And that's why I kept this on here to show you, like, okay, it didn't respect this immediate zone, right, on the 15-minute. But ultimately, that's why we go to the lower time frame and look for confirmation. Because if you don't look for confirmation, then ultimately you can get stopped out on something stupid. Now, I'll erase this. Actually, I'll keep it up just to show you if it plays out ultimately. But now, basically, in terms of this, you're back at this demand. I want to see this level get taken out and the price action continue to fold. But for me, because I pay attention to price action so much, after I saw this high, sweep this candle and start pulling back, come into here, come back here, and then like ultimately I'll pay attention right here. I'm like, okay, come higher. As soon as I start seeing pullback action Okay, this one still isn't higher than this one. Okay, this one comes up, sweeps this candle, but it's still, now it's pulling back even further. So I'll be anticipating, that money just transferred bearishly because you can see like these lows are getting attacked and they're forming wicks. The bodies are pushing to the downside. So I
Hmm.
pay attention to every single candle. And now when I see that level get taken out, right? That's a valid low. I don't have the seconds time frame anymore, so I can't show you the exact low. I'm gonna erase this too. All right. Gee, it's gonna make me mad. I need my freaking desktop back. It looks clean, but the RAM is just not enough. All right. So in terms of this was the low that got taken. I could either use like this candle right here, or like in this instance, I could use the entire range of candles. So let's just say that we use this.
Hmm.
And for me, I'll probably draw it out to this high ultimately because I'm a chicken and I don't want to get I would be like I said, old highs. Wicks to me, I'm like liquidity. I'm not trying to get swept. But this is like the highest point, prior to breaking this low. So I'm like, all right, that's it. And then like to minimize it, I might pull out my fib. And what I'll do is like either draw it from this one or I'll just do the entire range. So it wouldn't really
Hmm.
change too much in this. Let's just say I do just the candle. But I'll do like that. And my first target would be like just this low right here. Because this is a source of liquidity. And after we take out this liquidity right here, it really could just be inducement into that demand. And like I said, every zone will get a reaction. So I'll think about that. So if I see that inducement right, adjacent to this level, ultimately this will be a break in valid order flow. But this tapping in and using this as eternal liquidity will allow price, more or less to push up again. So like after this, I'll take some profits, maybe go break even. Okay, boom, it breaks. Okay, so this right here shows clear intent for sellers. We have a mitigation of this demand. Like I said, every zone is going to get a reaction. Push up, and the candle breaks that low. So like now, this more or less is some kind of supply. If you want to take that, it's up to you. That's another valid area. Usually when price is in a free fall like this, you want to wait for it to more or less come into these areas. Just
Hmm.
because
Okay.
like I will enter on this stuff right here sometimes, but it's just hard to spot it. Like you don't know when it's going to pull back, and it might only use this and go further. But we also have this imbalance here, so it could pull up to there. So when I start thinking about stuff like that, it fucks with my psychology. So I prefer to like get like order flow that looks like this
Hmm.
rather than shit that looks like this, and it's just kind of like free falling. Like, I'll wait for it to come up there rather get in it there rather than trying to get in
Hmm.
on this continuation here.
Yeah. Yeah. Because I was looking at the imbalance.
Mm-hmm. Because you see, like now it's still just falling. So if I was waiting for it to come here, it created another imbalance here, broke below this demand level. Just trace back into these buy to sell wicks, lower again. So now, like I said, I would already be up a decent amount. Let's see, 1 to 5, put a partial out, one break even below this level. And I'll use like a valid demand. So if we like basically cooked all this price action up and we formed all these imbalances and break this, I'm gonna go ahead and go break even because realistically, price shouldn't even retrace past this imbalance. But yeah, I'll go break even there. Or if we don't get that, if we're just have valid order for like this, I'll wait for like a break below here. Like so if I enter here, break below here, and then a retracement back into my entry, then a break below here. And after we get that second break is when I'll go break even. Because like now we've mitigated my entry and broken another low. Like we shouldn't come back here. You know what I mean?
Yeah.
All right, boom. Interacted with this liquidity. Price pulls into here. So if you see this break, then you know that basically you're pulling back. If not, then order flow is just still bearish. And that's why I say I'll wait to see what happens at a high or a low to make me form my bias for the next move. Okay, boom. It's lower. And so now if I start seeing consolidation like this, I'll pay attention to see what happens, above the high. Because if I see it come and take out this, then I know for sure that we're probably pulling back. Most likely. Oops. So you see how literally we come back to that level, still couldn't take it out. So that shows
Yeah.
me, order flow is still bearish. So like literally I'll pay attention to is order flow. And then boom, you see this is the first level that gets taken out. We have this level right here that caused the break. And from here, if you want to take a pullback entry, you could. But obviously, and based off the idea of liquidity, we could target this high first, and that'll be valid. And you see how it interacts with that. Boom, comes back to this level.
Right.
And now I'm pretty sure this is where price ends. Yep. And this is why I don't really like to play pullback because you don't know where it's going to pull back. Came all the way up here, but it would have been a decent trade. But yeah, does all that make sense?
Yeah.
Cool beans. You got any questions? You're quiet.
Oh, no, I'm just taking it in. And then my dog started barking in the middle of it. And I'm like, Jesus Christ. I know you heard him in the background.
Yeah, no, it's all good. I was locked in. But yeah, I mean, obviously, hopefully this helped. But like you were telling me, if you decide to do the live stuff too, we can talk about that.
Yeah.
But this is more or less like this is the idea behind it. Obviously, live, it's gonna be a little different, right? But the same things you saw here, you're gonna see them in the market. And this is like very funky price action too. And we were so able to find, a few decent entries. Like this one alone, it was like a 1 to 5. Did it play all the way out? No, it went to 1 to 4. Still good though. But yeah, I'm gonna go ahead and end it. I'll check you though.
Okay.
Mm-hmm.